Good morning and welcome to today's Sowetan Dialogue in partnership with Budget Insurance, where we will be talking all things short-term insurance. My name is Pearl Sukulu and I'll be your host this morning. Now, this morning, we are really lucky and spoiled to be able to share the next hour with a lady who in fact needs no introduction at all. We are going to be spending the next hour with award-winning financial journalist and author Maya Fisher-French. Maya is also the editor of the Money Pages at City Press and Maya on Money website. Maya holds an honors degree in economics from the University of Witwatersrand, and she is the author of Maya and Money, Implement Your Money Plan. Maya also presents and edits the Money Matters show on ENCA. Maya's special approach to guiding audiences in developing effective financial plans is her ability to take what is essentially really complex and make it very easy. Her practical approach to managing money shows her real understanding of where South African consumers find themselves in these really difficult times. So without further ado, let me welcome Maya, and let's get into the crux of the matter. Let's talk about insurance. Maya, why do we need insurance? Why is it even important?
So, Pearl, I think the Budget and Sowetan asked me to do this because I actually really believe in insurance. I'm one of those people who I am insured. And I think the reason is that I engage with people every day. And I know what happens in life as a result, because people come to me with their financial problems invariably. And I promise you, every week I get one or two, even sometimes three questions specifically around car insurance. And unfortunately, the reason I get these questions is not because people are saying, I'm looking at these quotes and I would just like to get a bit of advice on that, or what should I look for? It's the kind of email that I got last week, which was this chap who had insurance on his car for many years, but he was about to sell it and obviously feeling a little bit financially stressed. He canceled his insurance. And what happened? He went onto a roundabout and had an accident, which was his fault. And he now has to pay out. I just thought my heart bled for this chap because he's paid this insurance for all these years, and it's when he cancelled it and he had the car accident. Because that's life, right? That's life. And it's those kind of questions that I get. And I promise you, on Monday, I get these all the time. On Monday, I got an email from a chap saying, look, I was in a car accident. It was my fault. I can afford to pay the other person's insured. I can afford to pay the excess, but I can't afford to pay for the repairs. What can I do? And I think what's really important here is that people understand something, that if somebody else is insured, it doesn't mean that their insurance is not going to make you pay. I think people think, well, I'm not insured, but if I crash into the Ferrari's insurance person will pay for it. And what we're seeing is that insurers are becoming more and more aggressive, perhaps an unfair word, but they definitely will go after somebody who if the fault has been yours, because they cannot afford to keep paying for people who are uninsured.
Absolutely.
Yeah, only 30% of insurance of people on the road are actually insured, which means that two-thirds, only 30%, Pearl, which means that 2/3 are driving around uninsured.
Maya, why is that? Why is there such a small percentage of our drivers that seem to see the need for insurance?
Yeah, I think it's twofold. I think obviously it's affordability. What I generally find is that people go off and they buy a car, and they've got all this financing on it, but they didn't do their maths properly. They didn't add the cost of insuring it, the fuel and all of that. So they kind of let it just slide because they can't afford it. And I think there is the sense of, it's not going to happen to me. I'm a good driver. And I think even if you're a good driver, Pearl, going back to that 30% of insured people, even if you're a good driver and you believe you will never cause an accident, what if someone crashes into you and you're uninsured? You have a very high chance that other person is also uninsured, and you now have to get into a civil claim with them and sue them and try and get the money out of them.
Oy.
So yeah, it's really, really a big issue. And, Paul, the other concern that I have is that people often don't insure their cars when they're financed. Now, it's actually a requirement by law to insure your car. Yeah, not by law, but the bank will require you to insure if it's financed. And I want to tell you a little story about Bella. So Bella's I do something called Money Makeover Challenge, and she's one of my current challenges. She's an entrepreneur, and she has a bakkie for work. She is in construction. This bakkie she needs for work, and it's financed. And she hit financial difficulty earlier this year. This is even pre-lockdown, okay? Mm. So what did she do? She cancelled her insurance.
Mm.
Now, think about this, Pearl. She needs this vehicle for work. If something happens to her, if it's stolen or written off, she doesn't have a bakkie for work, and she will still owe the bank all that financing on it, which means she can't go out and buy another one. It's the worst possible thing she could do. And I think that is really the other issue, is that people just don't realize that when you cancel it, the risk, that absolutely massive risk that you're taking on.
So you're saying look for other perhaps luxuries to cut down on, because insurance is in fact not a luxury. It's not something that needs to be cancelled the minute we hit difficult times, because in fact cancelling it can create far more difficult times.
Exactly. And as I said, the questions that I get from readers are usually about the accident that they've had, and they were not insured. I don't get questions from insured people because they don't have any questions, because their insurance sorts it out for them. So it's always those people who are saying, like, what do I do? So absolutely, for me, and I thought it was also just interesting, Paul, with lockdown, a lot of people did cancel their insurance, their car insurance. So people, most of the insurers came to the party and offered reductions. No Budget Insurance did. They were one of the insurers. Most of them did. But what was also interesting for me was to get some of the stats during lockdown. So people thought, I'm not driving my car, so I don't need to insure it. Let me at least save money during lockdown. These are some of the stats that have come through, which is quite interesting, is that, yes, maybe during those 3-5 weeks of lockdown, you weren't driving, but car theft and hijackings are now back to where they were pre-lockdown, okay? So the chance of you getting, of your car being stolen or hijacked is now back up to where it was pre-lockdown. Vehicle accidents claims are starting to climb again because everybody's back on the roads.
Absolutely.
And what I also found so interesting was that during lockdown, there was actually an increase in the severity of motor claims. So what that meant was, yes, maybe the insurers had fewer claims because less people were driving, but the quantum of the accident was much larger. So people, when you're going to work and you're in the bumper-to-bumper traffic, those bumper bashings weren't happening. But what was happening is the guy driving 120 down a 60 place because there's no other cars on the road. And I can confirm that this is very true, because my neighbor, a friend of mine's neighbor, is a Netcare helicopter pilot. So he's the guy who goes to pull people out, of those really bad accidents. During lockdown, the first 3 weeks of lockdown, I'm not talking about lockdown 4 or 3 or whatever version we're on now, 6 a day. He was still 6 a day. So these major accidents were also happening. So I think this idea that we don't need insurance during lockdown is also really, really not valid. And I've been talking now most about car insurance because that's the one that I think most people are engaging with. But household insurance, we're starting, the claim stats are starting to come through for very big increases in home robberies, because of course poverty and unemployment is going to affect our crime levels. We're starting to see increases in break-ins, actual physical break-ins into homes, cell phones, laptops, jewelries being stolen. So lockdown doesn't mean that you shouldn't have insurance in place.
And I suppose, once one gets into the habit of not having insurance and they don't have that burglary or that car accident in month 1, they think, oh, well, why not continue to month 2 and month 3? And in fact, it's the birth of a terrible habit.
Yes, and yeah, I mean, I had a robbery in November last year, and I can tell you when they come in and they take all your laptops and your cell phones and all of those things, you are very, very grateful, A, that you're safe, and B, that you are in place. But I think, Pearl, for me, one of the big things that, we've spoken about this, the need for insurance. And I think by now you may have gathered that I really, really think insurance is very, very important. But one of the
Absolutely.
questions, yeah, when I get all the time is, okay, how do I cut my insurance levels? Well, how can I have insurance that's affordable for me? So I thought if I could, I've done a couple of slides. So maybe I'm just going to go through through the slides with our viewers. And these are just some tips that I've put together to say, listen, guys, absolutely, you need car insurance, you need household insurance. I'll go through that as well. But if you're finding it hard to fit into your budget, here are a few tips.
Awesome. Let's hear it.
Right, is the slide up? I'm hoping they are. Trevor's loading slides. The joys of webinars and technology. Right. So as I was saying to Pearl, I really believe insurance, obviously, and I've just explained why, because I'm the one who gets the readers' letters saying, what do I do because I can't afford to pay back anybody that I've just crashed into. But how can you make sure that you're paying the best rate? Let's be honest, that's what we want. We want the best rate. We want to feel like we're overpaying for insurance either. So the first point really is to shop around. That is the most important thing you can possibly do, because every insurer has a different, prices very differently. But it's important that you understand what affects your insurance when you're looking at shopping around. Just make sure that you understand what you're comparing. So every insurer, when you get a quote, you may get a quote that is substantially cheaper than another insurance quote. Don't just be fooled by price, because price has a really can often hide something. So when I'm looking at comparing insurance quotes, the most important thing I ask is, what are you not covering? What is missing in this cover? Now, if the things that are missing in that cover are not relevant to me, that's fine. But if it's missing some really, really key details, then obviously I need to be knowing about that. So one of the first questions to check is, what is the replacement value base? This is specifically on car insurance. So when you say your car's written off or it's stolen, what value is going to be paid out? And generally there's three values that an insurer will work on: the retail, trade, or market value. So the retail value is the highest price. That's the price I go to the dealer and I buy a car. I'm going to pay the retail price. If the trade price is the lowest kind of value that you would, because that's the price that you would get for a trade-in. I don't know if you've ever done this, where you've gone, you've seen what you think your car's worth, you go to the dealer and do a trade-in and they offer you like 20, 30 grand less for your car.
Yes.
Because of course they're going to fix it and they're going to put it back up, as they put the premiums back up put their markup on it. So there's that trade value. And then in between that is what they call the market value. And that's sort of between your retail and your trade. So it's very important to understand that if your car's written off or stolen, what am I going to be paid out? Will I be able to replace the car for the same mileage and the same age that it was with the money I'm going to be paid out? Or is there going to be a shortfall? Another one that I find is often one of those little extras, one of the small fine print, is whether the car's accessories are included in that payout as well. So you may have a car with leather seats and a sunroof and a tow bar, and some insurance policies only cover the car value for a standard fitting. So when they replace the car, it's only based on what that retail value or trade value or market value would be at standard fittings, not those little extras that you bought when you bought the car, the leather seats and all the rest of it. And for some, it is included. It will say this will cover car accessories. On other quotes, it'll say those are extras that you have to add to the premium. So again, very important to check. And also hail damage. This is one that I have had complaints about. Some quotes don't include hail damage, or specifically, they may only include hail damage if you live in Gauteng and not anywhere else in the country. This is because they're saying, well, you don't need hail damage cover outside of Gauteng because that's where the big hailstorms are. I live in Cape Town. Last week, we had hail. It does actually, there is hail in other parts of the country, A, believe it or not, and B, you could actually go and visit family in Gauteng and get caught in one of those horrendous hailstorms. So that's one that I would also just check is are you covered for hail damage? And the other one also to look on it when you're comparing apples with apples is that some policies may automatically include retrenchment cover. So this is where they cover your premiums for a specific period of time, usually about 6 months, if you are retrenched. Another policy, it may be a top-up, it may be an extra that you have to add on. And just a tip, guys, in the environment we're in right now, a lot of people are worrying about retrenchment. In fact, I was on a webinar yesterday, and 64% of the people on that webinar thought they were going to be retrenched the next 3 months.
Oh, that's terrible.
Go check your insurance policy now. Do you happen to have that premium waiver? Unfortunately, and it's probably unlikely that you can add it on now because there will always be a waiting period on those premium waivers, but it's worth checking. So those are kind of things when you're looking at those policies and comparing them, make sure you know what's there and always ask the question, what am I not covered for? What is missing on this policy that I'm getting it for cheaper? And also be very aware, Pearl. This is the other thing that, guys, that it's insurers risk rate differently. And this is where shopping around really can benefit you. Because some insurers look at different people in different ways. And I think I've got the line here, is your insurer biased against red? Because some insurers also look at the color of your car and see the impact of that. Wow. And it may actually affect your premiums. Not all insurers do. And I know Budget, for example, doesn't look at the color of your car, but there are some insurers that do. So the color red is a very interesting one because people think, oh, it's not so visible on the road, which is partly true. But it's actually about the paint costs. So if you damage your car, certain paints are a lot more expensive than others to use for repairs. Red is one of them, and obviously your metallic colors are another. So some insurers, as I said, would consider this. And another one that I mean, these are the kind of things that I pick up, right? This is the best part about being a journalist. I pick up all these weird and wonderful things because people write to me, and then I go and I quickly make some phone calls, and I find out from the actuaries why these things happen. If you're divorced or unmarried, you will often pay higher premiums. How's that? You'll pay more if you're unmarried, or especially if you've got divorced. So this happened to a family member of mine. She got divorced, and she happened to phone her insurer about a totally unrelated thing. I think it was she had to update her debit order or bank details or something because of the divorce. And they went through her questions. They said, do you still live at this address? Are you still married? And she said, no, actually, I'm divorced. And they increased her premiums. So
what?
Well, I got hold of some actuaries and I said, what's going on here? And they said, actuarially, statistically, remember, insurers work on stats. That's all they look at. They don't use psychologists. They look at stats. And he said, what we do know is that you are more likely to have an accident within the first 18 months after a divorce than any other time in your life.
Wow.
And the amazing thing is she had the only accident she's ever had in her whole life 6 months after she was divorced. So that is...
Oh, my goodness. That's adding insult to injury.
Now, whether you are... I don't know what the psychology is. That maybe you're really emotionally traumatized or you're out partying at all hours that I don't know. No judgment call there. But those are some of the things that can actually affect your premium. Mm. And also your age. Really, really.
Right.
And
so Maya, can I, just because you mentioned age, can I just share a question that's come in from one of our viewers? Because it does also speak a little bit about age. Our viewers asked, for a first-time buyer, which insurance do I take? The car dealerships, or do I look for my own? I am 31. And I've never owned a car before. So if you could weave an answer to that question into what you're talking about right now.
definitely shop around. So
Okay.
that's it. Okay, so that's exactly it. I mean, I'm so glad that question came because it's exactly about shopping around. So you want to look at, definitely take the one that the car dealer's offering you, but you also want to be shopping around and making those comparisons, using what I've just shown you now, like what are they offering, asking the right questions. And I'm going to get onto now having never owned a car before. And this is a very, very good question. As a 31-year-old. Now, you as a 31-year-old, you may not have owned a car before, so you haven't built up that history of having been insured before. And obviously, number of years of insurance and not having had claims can be obviously very positive for you, can show that you're a good driver. Your insurer now doesn't have a record of that. The question is when did you get your driver's license? And this is absolutely critical. And I want to show you this is why anybody up to about the age of 35 should shop around for their insurance every 2 years. Have a look at this next slide. That slide up. This basically, one of the biggest risks is, one of the biggest risk factors for an insurer is your driving experience. It makes sense. You are right. How long you've been driving for, you're going to develop better road response, you're going to be better at avoiding accidents and all the rest of it. And of course, there's also the factor of the testosterone, the youth, going out partying, all of that. So age plays a really significant role in the cost of your insurance. So in this slide that I put up, this is a 20-year-old, 22 and 25-year-old. This is the identical vehicle. So we're assuming that if I was 20 years old and asked for it, what would it cost me? If I was 22 years old, what would it cost me? 25. And look at how those premiums really start to come down with age. Now, Pearl, I mentioned gender. So let's just quickly deal with the gender issue. Men, if you're watching this, these are actuaries. They don't lie, okay? It is a fact. Okay, it is a fact. Women have less accidents. Okay.
Thank you for debunking the myth.
It's not me telling you this. It's the actuaries telling you this. And the actuaries are telling you this because they have the claim stats. It's very simple. Okay. Now, maybe you think your girlfriend can't park. Okay. Whatever other bias you may have, the reality is you are a bigger risk to your insurance company than your girlfriend or wife is. Just getting that off my chest, right?
Thank you for that.
So the most important thing when shopping around is, especially when you're young, your insurer isn't going to phone you and say, oh, happy birthday, you're a year older today, you've got another whole year of driving experience, we're going to drop your premium. No, they don't do that. Okay. You have to do that. So you're going to pick up the phone to your insurer and say, listen, I want you to reassess my cover based on the fact that I have now driven another year. I'm now another year older. And obviously, if you've had a car accident during that year, it's not going to go your way. But if you haven't had a car accident, your premiums really for the first sort of 10 years should be coming down consistently as a result of that. And what is also interesting, just Pearl, if you'll notice, I'm at 25 years old, the difference between male and female starts to close that premium gap. And that is because men also, their testosterone levels start to calm down after 25. Like an insurance nightmare is a 22-year-old male in a red GTI,
Oh dear.
And you can also see from that slide that the value of the car. So obviously you've got your VW Polo there is one price. The minute you go up in value, and especially if it's a performance car, the price goes up, the insurance price goes up. And I think what I'm surprised I haven't seen coming up, Paul, I don't know if we've had a question on this yet, but is around, everyone says, oh, but shouldn't my premium go down every year because the value of my car's gone down?
Absolutely.
Yeah. So every year, my car devalues, especially, I must tell you, your car devalues massively in the first year by about 25%. And thereafter, it devalues a little bit each year. And that's also not entirely true. Yes, there's an element of that. But the claim stats, when in terms of claims, insurers pay out 85% of claims are for accidents that they repair. not theft and not write-offs. So, well, let me put it this way, 85% of are accidents, the rest 15% are for theft. And of those 85%, only 15% are write-offs. So about 70% of claims, if you think about it, is about putting the car back on the road. So the most expensive cost to the insurer are parts, paint, and repairs. And those go up in price. It doesn't matter. Even if your car's worth, 20,000, 30,000 Rand less, when you crash the car, the paint costs, especially if your paint is imported or your car is imported, any of your car costs are imported, that will have an impact. So your premium increases are going to relate more, obviously, to your propensity to have accidents. So if you crash your car fairly frequently, your insurance premiums will keep going up. But it can also relate to the type of car that you're driving and also the Rand value, because the Rand exchange rate, if you're driving, for example, an imported car, if the Rand has devalued massively, those parts are going to be more expensive. You will see that feeding through to your premiums.
So perhaps, Maya, what you're talking about now might relate to another question we have around differences in insurance, whether I've bought a first-hand or second-hand car. You're saying it's not really about the value of the vehicle itself. It's more about the cost of replacing parts and repairing dents, etc. Let's talk a little bit, if you don't mind, about the difference in insurance, if there is any at all, between a first-hand versus second-hand car.
Probably so the value of the car would still play a role. Remember, 30% of that would be, when they're looking at the premium, 70% is car accidents that they would have to put the car back on the road. 30% would be write-offs or theft. So obviously the value of the car, so you may have bought a brand new car versus a car that's 5 years old, still maybe the same type of car, but they would definitely, you would pay less. Absolutely, your premiums would be lower because the actual value of the car is lower. But again, what I would be looking at is if you're buying a secondhand car, just looking at the impact of things like, is it imported? Are there imported parts? Those aspects of it are going to play also into the insurance. I think it is both, but definitely also, as I said, performance cars that can go faster. Some insurers, remember I spoke about risk rating earlier, some insurers would look at that and think, look, if you're driving a white Volvo, station wagon kind of car, you're one type of person. If you're driving a red two-seater high performance car, you may be more inclined to speed. So some insurers will be looking at those aspects. So I think it is, but yes, absolutely, the value of the car will have an impact.
Right.
And Pearl, we've spoken about shopping around, okay, and doing all those good things, going and finding out if you're comparing apples with apples, and trying to have a sex change if you can, to be a woman, or whatever you've done. Add a few years onto your driver's license.
Yes,
but what if you still can't, and you need to find more ways to cut? One of the ways is to increase your self-insurance. I don't make this my first recommendation. I would really try as much as possible to insure fully, to try and have my insurance covering the bulk of my needs, simply because we're very bad at preparing for the unexpected. But one of the things you can do is you can say, listen, maybe the basic insurance, and that's, by the way, comparing apples with apples, is the excess. The excess is when you have a car accident or a house claim, and you have to pay out the first portion of it. How much of that do you have to self-insure? So one quote may show you 2,000 Rands of excess, another one may show you 5,000 Rands worth of excess. And the difference between those excesses is quite significant on the premiums. And the reason for that is most accidents, as I spoke about, are bumper bashings, those sort of accidents. So there are a lot more claims at the sort of 5,000 Rand level than there would be, so most of the time an insurer would perhaps land up, if you insured for 5,000, you would cover more of your accidents yourself from self-insurance than perhaps at 2,000 Rand, where the insurer would more often be having to pay out. So having a higher excess is one of the ways to drive your premiums down. But if you do this, this is just financial health 101, you need to have an emergency fund. You need to have something that the money's there to cover it. Because what you land up doing is you land up getting out the credit card, right?
Yes.
Credit card, and that's a really, really major problem. And if you are going to have that excess, and you can have that excess also on your house insurance, or any of those things, you say, well, I'm going to take a 10,000 Rand excess on my house insurance. So you need to know what those gaps are and just be prepared for them.
Right.
And the other one really is also that you can then look at, and we spoke about that second-hand car, going back to that question about the second-hand car or a new car. One of the other things is to look at the different types of cover. So maybe you can't afford the fully comprehensive expensive cover, but you can afford some kind of cover. So I just want to go through the sort of 3 options that you can select when you're taking out insurance. So I think we may all be familiar with the comprehensive, fully comprehensive vehicle cover. So that is, I crash a car, the insurer pays my repairs and the person I've smashed into repairs. I'm completely covered. With third-party fire and theft, if I crash into someone's car, their repairs are covered, but mine are not. However, if my car is stolen or there's an electrical fault and it burns, they will pay out, but they won't pay out for my accident cover. So remember that I spoke about that 70-30 ratio. They'll cover just for the theft. They're not going to cover for your repairs, but they will cover for the repairs of the Ferrari you've just crashed into. And the final one is third-party cover. So this is, your car gets stolen, tough luck. But if you smash into the Ferrari, that is covered. So I would say that at the very least, if you honestly can't afford insurance, and I'm not talking about you can't afford insurance because you want to buy a pair of shoes. I'm talking about you seriously can't afford insurance. Then at least have third-party cover, because there's 2 emails I had this week. Both of them, would have been covered if they just at least had third-party cover. But I want to make a point, and going back to that new car versus second-hand car, if you buy a new car, or any car actually, and it's financed, the bank requires you to have fully comprehensive cover. So it's very important to understand that you are in breach of the contract if you don't have insurance, if you cancel it, or if you have only third-party insurance. Very important to understand.
Okay, Maya, I'm going to interrupt you again because we've got such limited time, and I really do want to get to some of more of our viewers' questions. There's so much content here, but we've got some questions around the excess that you were talking about earlier on. Our viewer wants to know: are there insurers that don't have an excess option at all, and how would that work?
So there's zero excess.
Correct.
I haven't ever come across an insurer that has zero excess as a standard, but you can opt for it. You can say, I want no excess.
What would my premium?
Yeah, it'll hike your premium. So I'll pay more, but I want no excess. And for me, I think that you could go that option, but you just need to look at what is that doing to your premium. And could you perhaps take the difference in that premium and just put it away every month so that you know that you have a little nest egg to pay out the excess. But it would definitely be something you'd have to do as an add-on. I've never seen it as a standard on any contract.
Okay, then we've got another viewer who asks, hi Maya, I would like you to please go over the insurable interest concept. My friend's claim was rejected because he put his girlfriend on the policy and added himself as a regular driver. So he paid for all the premiums and the car's in his name, but he just added her as the policy holder. Can we take this matter to the insurance ombudsman?
Okay, so the insurable, because his claim was rejected so who had the accident? That's what I'm not sure of. So he put his girlfriend on the policy and added himself as a regular driver.
As a regular driver.
Yeah, I'm hoping there's somebody from budget insurance on that, because my understanding is that as long as you are, so for example, my husband and I both drive each other's cars. So because one is, we can put bikes in and the other not, it's one of those. So we pretty much interchange our cars, and we just make sure that both of us are listed as as regular drivers on those. So the car is maybe in my name. I think it could be to do with perhaps driver's licenses and things like that. But I would be surprised that it would have been rejected on that basis if he was listed as a regular driver. So I would probably need a comment from Budget on that.
Well, perhaps to the viewer who has asked that question, a little bit more detail would really help us. Who was driving the vehicle? We only have Maya for a short amount of time. You're never going to get this amazing kind of advice for free. So quickly, if you can just expand a little bit on your question to the viewer who sent us that, please.
Great. So maybe if we get some more car insurance questions, we can definitely cover those. As I said, car insurance is definitely the big one. Like everyone wants to know our car insurance. But one of the things that I wanted to also just cover, Pearl, is household insurance, because people also have laptops and cell phones and household contents. And one of the big problems that I find, and this is where I get complaints, is this concept of under-insurance. So underinsurance is, as I said, is primarily related to household contents. So this is where you have some household and contents insurance, but it's actually not equal to what your household contents are actually worth. So when you come to claim, your insurer doesn't pay out the full amount. They only pay out based on the percentage that you actually had covered. So I think in this example, I've got a slide here that shows that, so perhaps you had a claim of 10,000 Rand. You insured your household contents for 50,000 Rand, but the replacement value of your household contents is actually 100,000. So you are underinsured. Right. They will actually they do a calculation, they take the 10,000 claim multiplied by what you were insured at divided by what you should have been insured at, and they will only pay out half. This is probably the most common complaint that we get about household insurance. So I wanted to share with you a little bit of a personal story here about dealing with underinsurance. So because I was aware of this concept of underinsurance, my insurer offered an assessor to come out and check my house out for me. I was a little bit worried because I thought, you know what, I probably am underinsured and my premium is going to go straight through the roof. And when she comes around, but anyway, I did it. And this woman arrives. First of all, anybody out there who wants a job and they love shopping, you've got to become one of these assessors. So her job is totally separate from the insurance company. She runs her own business. I loved her job. I spent more time interviewing her about her job. So she's totally separate, and she goes around shopping and looking at the prices of everything so that she knows what things are worth. How fun is that? That's her job.
Wow.
She can tell me prices of couches here and there, and she knew stuff, clothing. She was amazing. Anyway, just an aside, really nice job. She took 2.5 hours. She went through my whole house, and I'm talking about pulling drawers open and closing them. And we would have these debates. I'd stand there and I'd say, yes, that carpet, it is a Persian carpet. I inherited it. I would never replace it. If, it was stolen or the house got burnt down. So I don't want to include that. And she said, no, we can't do that. It's there. And when it comes to claim insurance, we're going to tape this conversation. You're going to say, well, I had a Persian rug I want to replace. So no, we're not going there. I'm putting this down. So as I said, my head is like, oh my goodness, all these things are being added to the bill. And I wouldn't buy that carpet if my house burnt down. Anyway, she also itemized all our electronics. So everything was itemized, everything was covered. The next month, so we get the new premium. The premium, I kid you not, Pearl, had gone down.
Had gone down?
Had gone down. Not by a lot, maybe by 60 Rand or something. But the point is it had gone down and not up. I was convinced. And what I learned is that what a lot of people think is they think, oh, you know what, I don't need to insure my whole house because what's the chance of being completely robbed? Yes, your house could burn down. And I have to tell you, somebody down our neighbor, well, a couple of houses down from us, house burned down 2 years ago from electrical fault. So it does happen. But in our minds, we think laptop, cell phone. But if you just insure only your laptop or cell phone, it's actually quite expensive than if you have your household insurance and itemize those separately. That household insurance, they also accept that it's very unlikely that those events will happen, and they price accordingly. So it was an amazing experience. And then I got robbed. I mentioned at the beginning of this webinar, I had a robbery in November. And they came in at night. We have our TV room is where all our laptops are plugged in overnight, cell phones, you know, where everything is, because the kids do their homework there, everything. They came in, cleaned us out of electronics. Now, imagine if I hadn't have listed all of those electronics. Imagine if I hadn't have done that process, because now I've got to explain to insurance company all of these electronics that they need to now pay out for. There was no questions. They didn't send an assessor. Nobody asked me a single question because they had known what was in my house. They paid out within 3 days. I was paid out 100%. So that's just to give you, less I think the excess that we had, that is just to give you an idea of the importance of making sure that you're not underinsured. And the price difference is, if there is any, is negligible. It really, really is. And I strongly advise you not to fall into that that trap of thinking that I'm saving money by being underinsured, because the difference is absolutely minimal. And believe you me, when you're traumatized, it was actually a very traumatic event, because we had been at home, you know, I'd seen the man, I'd screamed. It was all one of those horrible evenings, and not to have to now fight with an insurance company. Remember, I needed my laptop for work, all of those things. It was very, very important. So I just wanted to share that sort of personal story about.
I'm so sorry about that terrible incident. I can only imagine how awful that must have been. I'm wondering though, you know, Maya, if you had separate insurance for that laptop or for those cell phones and not covered them under household insurance, what would the impact have been, you know, cost-wise, I'm talking about?
Yeah, so it is important that when your insurer insures you, that they look at what they call all risks. So those are the items that can actually leave your house. Those are your laptops, your cell phones, all of that. And what a lot of us do, or we land up doing, and in fact, I think if you want, Trev, if you want to move to the next slide, I actually have a point on that, on duplicating. So, I mean, on combining your policies. So a lot of people will end up taking the cell phone, you know, when you go and you buy your phone, and then MTN says, do you want to take cell phone cover? And you say, oh, yes, I'll add it on. That's far more expensive than adding it onto your household policy. It's quite substantially more expensive. Because remember, it's one admin fee. So if you have one admin fee, and on that admin fee, you have your vehicle insurance, your household insurance, and within your household insurance, you've listed your cell phone, your laptop, all of that. It's a lot cheaper than individually itemizing all those. And I also did, you know, I get quotes all the time, just to, not for myself, even just to, as a consumer journalist, to look at them. And I actually looked at one, for example, where I asked them to say, just insure a laptop and then do the laptop plus, I think we did 150,000 Rand of household contents. And I think the premium for the difference between only insuring the laptop or having the laptop plus 150,000 Rands household insurance was 20 Rand more. So that gives you an idea of how beneficial it is to have the household contents and then list the items within that, rather than individually insuring. It can save you quite a lot of money.
Especially if there are various laptops in the household and various cell phones.
Absolutely. And make sure that when you do get a new laptop or cell phone, and it falls under part of your household contents, that you then you notify the insurance company. Take a picture of it, take a picture of the slip, and notify them. Again, because you can imagine, I mean, the amount of fraud that the insurance companies deal with, they're going to be asking questions.
Of course.
Yeah. Are there any other questions, or should I carry on with some more tips?
Let's continue.
So I spoke about that, about combining your policies and making sure, and that is very true. I mean, if you take individual, especially car and household, if you combine them, the costs come down quite significantly. And then also look at if there's duplication. So maybe you have roadside assistance on your medical aid, plus your car insurance, plus your health. I don't know how many I land up with this, where I've got like 5 multiple road assistance, you know, measures. And, you know, are you paying for some of those that you don't need to be paying for? And car hire is another one. So maybe you've got 2 family cars. If one gets stolen or written off or has to be repaired, do you really need car hire? Because that often comes at an additional cost. And I think we've spoken about, you know, about having your cell phone. One of the big ones is like, I don't take out separate cell phone insurance because it's covered. And the other one also to reduce your premiums is, well, if you've had a positive change in your circumstances, is to update your details. So one of the big ones is maybe you were using your car for business, you no longer are. But the other one is moving. And I had this personal experience, Pearl, when I moved from Johannesburg, I'm afraid to say, to Cape Town. My insurance, I notified my insurer, my insurance dropped by 30%. So
What? By 30%?
My car insurance dropped 30%. So it unfortunately says something about, obviously, the crime rates in the two provinces relatively,
Yeah.
although that was 10 years ago. It may have changed now. So very important. You may be moving somewhere more secure, or you're now parking in a garage where you may not before. So anything that improves your, your risk ratings, very, very important to notify your insurer. And also, your insurer may give you better rates if you have better security. So, on your house, ask the insurer. One of the things we asked, we said, do you need, so they may say you need an alarm. Now, okay, I need an alarm, but do I need armed response? Would it make a difference? Don't assume it makes a difference. They may say, no, we just want an alarm. If you have armed response, it's not going to improve your premium. You may find that an insurer says, you must have a tracking device, or you may say, well, do I need microdots on my car? Or find out what security measures on your car or on your household will improve your premiums. I don't race off to do something because you think it's going to improve it, because I find that is also quite, it makes quite a big difference.
Mm.
And I think just to end off, because we are getting to the end, and I just want to sum up, because is just don't let the debit orders bounce. We've spoken about people needing to cut back. I think times are tight. And really, one thing I really don't want you to do is just let debit orders bounce, because your bank is going to charge you an absolute fortune for that bounce debit order. You're up to like $100. And there could be penalties from your providers. I don't necessarily the insurance companies, but even like cell phone companies, they could charge a penalty if that debit order is missed. Pick up the phone. As I said, if you've been retrenched, you may have retrenchment waiver on your policy. Not all do have it, but you may have it. You could speak to them and say, listen, I'm on comprehensive. I can't keep it up at the moment. Can I move to third party for a while until I can afford the comprehensive? Just have those discussions. Don't just stop the insurance and walk away. So I think that's probably what I want to say to sum up at this point, Will.
Right. Well, we do, as you did say, one of the areas that seems to attract a lot of questions, Maya, is the vehicle space. And we did continue to get some questions around vehicle insurance after we moved off the topic. But so I'll talk about that. But I'm also then going to ask you a little bit more about changes in season and what happens in winter. Is there something to think about? I know that you've always got tips about some things to think about around household insurance in relation to the winter season, our geysers and our electric blankets, etc., all running. But let me start with the first question, which is around the vehicle insurance, and close that off. The viewer wants to know, do I insure my 14-year-old Bucky on retail or market value?
Yeah, so I've seen generally the advice tends to be that on a car that old, you probably want to go market value. And the reason for that is that it's quite hard to find a retail value on a car of that age. So retail value is pretty much what you'd be buying at the dealer level. Whereas on a 14-year-old Bucky, if that's what you needed to replace, you would, you'd probably go and buy it through Auto Trader or through a private deal, which would be closer probably to market value. So I know that certainly the insurance companies or the people in that space say, look, for an older car, you could look at market value. But what I would think about here, and this is, by the way, I'm the person who drives my car till they're 13, 14 years old, because I don't like car finance, is that you pretty much can't buy. You would never go and buy a 14-year-old Bucky. No one in their right mind. I love my car. No, but I love my car, but I've had it. I buy my car sort of 4 years old, and then I'll drive it for 10 years. But I've serviced it. I've looked after it. I know that car. Would I go and buy somebody else's 14-year-old car? No. Okay, so it's likely that if your car is stolen, because this is obviously assuming here a write-off, it's in an accident or stolen, you're probably going to upgrade. You're probably going to be buying a newer bucky. So keep that in mind. When you get the payout, you probably need to start putting a little bit of money away now, or thinking about how you're going to finance a new car when you need to. Just a thought. Being that kind of person who drives their car till they're 14.
Great idea. Great idea. Maya, let's, in the very short time that we have left, can we just get some tips going into winter? I understand that claims tend to increase for certain reasons. Can we talk a little bit about that?
Yes. So one of the big things we see with winter coming are two really big ones. Obviously, geysers become a big problem, especially up in Gauteng, where the temperature changes are quite significant between day and night. And I actually had a bit of a freak out myself, because I was discussing this. I was actually chatting to Jolene. She's probably listening in on this. She's the PR for budget insurance, and her geyser burst a couple of weeks ago. And of course, your building insurance will cover the actual geyser, but it destroyed her floors. And I suddenly realized that my geyser sits in my bedroom above my cupboards with my clothes in it.
Oh, my goodness.
Yeah, so I've had a few people saying, I think you should move your geyser, which is something I can't do it now. But at least I know that if that geyser bursts, yes, the geyser is probably going to be the least of my worries. It's going to be my entire wardrobe that needs to be replaced. So it is also about household insurance would cover those sorts of things. So that's like quite a big risk I'm sitting. I don't know if my insurance company is listening, and I'm going to go and quickly change my premium. So I didn't realize that wardrobe was at such high risk. So yes, geysers are a big one, and fires. So, if you've got a fireplace or even like a little mortar fire or open fire, go check the chimney, because some bird has probably been living there during summer. And we had a neighbor last year who had fireballs literally flying out, started a fireballs shot off because birds had been nesting in there. I think those are the sort of things that you've really got to watch out for. Certainly, I'm in the Cape. You've got to clear out your gutters for the rains. In Johannesburg, that would be more in summer. So it is just about also being aware and maintaining things and making sure you're ready for these seasonal changes.
So that, by taking all of these precautions, really you're reducing the likelihood of having to claim at the end of the day, and potentially affecting your premiums should you have to make a huge claim.
Yes, so I think that is, we haven't spoken about frequency of claims. So, every time you claim, it does affect your premiums. But the flip side of that is if you haven't claimed for a while. So say, for example, I actually had a car accident that was not my fault. Guy bashed into me, and of course it was somebody who was uninsured. Hence, I'm probably a little bit tense about the stack of insurance.
He was one of the 70%.
Yeah, and my premium went up, but I've now haven't had an accident for 3 years. So I've gone back to my insurer and said, hold on, I'm now claims free for 3 years. You've got to bring my premium back down again. And obviously I'm knowledgeable on these things because I write about it, but that's just another tip. If you do look after things and you maintain them and you don't have claims, your premiums will stay relatively low. Or if you've had a claim but you haven't had a claim for several years, subsequently go back and tell your insurer that they should probably relook at your premiums.
Right. And that, I suppose, Maya, goes for household and car insurance.
Absolutely, for both of those. And also don't go and claim for absolutely everything. You've got an excess usually, but also if you keep, claiming this, that, the other, it is going to affect your premium. So my advice really, and I think if you see any of my other work, I drum on about the emergency fund, but make sure you have some kind of cash flow and liquidity just to cover some of the smaller incidences, so that you're not constantly pulling on that insurance, which will put your premiums up.
Right. Now, Maya, unfortunately, time is always an issue. And believe it or not, we've been chatting for an hour. So hard to believe that time can fly fast.
I need my water because my voice is starting to go after an hour.
Now, Maya, just to wrap off, I mean, there's been tons of really great advice, particularly around the vehicle insurance. We haven't had as much time as I would have liked to talk about more about household and building insurance, etc. But one of the key takeouts is shop around, keep your insurer informed, and update your information, because life is always changing. But just to kind of wrap up for our audience, some final parting shots.
I think it is that, accept that that insurance is a non-negotiable for me, especially if you have, well, first of all, if you have a vehicle, if you are spending money on a car, go and insure it and make sure you price that insurance in as part of your affordability. To me, if I owned the world or I ran this country, I'd make it compulsory to have insurance, and probably because it would also bring our premiums down if everyone was insured, because you wouldn't all be paying for other people. So I think if you're buying a car, you have a car, insurance is a non-negotiable. How you insure it, we've gone through ways to keep that down. And also, don't think, when you think you're taking shortcuts, like only taking laptop insurance and not household insurance, look at those options and just ask your insurer. Always go and ask them and say, what would it cost me to do this? Make the assessments, and then look at other ways that you could perhaps reduce your premiums. But if you are going to do so, make sure that you have some kind of funds put aside. But for me, insurance is part of life. We spend money on things, we buy nice things. Let's make sure we insure them as well.
Absolutely. And, when we look at the cost of insurance in the grander context and grander scheme of things, it's funny how that 350 Rand, that 450 Rand, we part with that money so easily on such frivolous things. But, when you think about the cost of having to replace a vehicle, replace a geyser, replace your household goods, you really realize that 450 Rand that you spent on buying, a top that you're not going to wear more than 3 times, or a new pair of shoes, etc., would have been much better spent protecting the assets that you work so hard to acquire.
Absolutely. And just as a final point, you may be sitting there thinking, but I haven't claimed for 3 years. All that money could have gone somewhere else. Think about my poor reader who crashed his car after cancelling his insurance. Life happens.
Life happens. Maya, thank you so much. To all of our viewers, thank you so much for tuning in. I'm going to just give my personal testimony regarding that geyser insurance. As we're coming into winter, my geyser also burst, and thank God I did have the insurance to cover that. And when I look at the cost of replacing a geyser, that 10,000 Rand, and I divide that over 2 or 3 years, you realize that the cost of the insurance is so much less than having to fork out that 10,000 Rand. So for me, I was incredibly grateful to be able to have that geyser replaced within less than 3 days. The insurer had come out and assessed and sent a supplier through to come and fix the problem, and I wasn't without hot water for very long. So I am absolutely on your page. I support your belief that everyone needs to be insured, and surely there's just 1 or 2 little luxuries that we can set aside in order to keep our homes and our possessions safe in the event of a horrible emergency like that.
Excellent.
Maya, thank you very much for your time. To our viewers, thank you for tuning in, and thank you for your questions. Unfortunately, that is all we have time for today, but stay tuned and keep following what's going on with the Sowetan Dialogue, because I know that there will be many, many, many more fantastic topics still to come. If you do still have any questions, do send them through, and we'll see how we can get back to you with all the correct answers.